Welcome to the webinar, everyone. Thank you for joining. Today we will be presenting From Raw Materials to the Final Sale, Solving Complex Sales and Use Tax Issues. Our experts today are our guest, Alex Laskowski from Grant Thornton, who is the partner of state and local tax located in the Chicago office, and from Sovos, Matt Walsh, the principal of indirect tax located in our Boston office. Both of these gentlemen have great experience in the indirect tax industry, and we're very excited to hear from them. First, just a quick housekeeping items. Our webinar will be just about 1 hour long today. Feel free to ask any questions you may have throughout the webinar using the GoToWebinar side panel on your screen. The experts will answer your questions you may have at the end of the presentation. Please remember this presentation is eligible for 1 CPE credit. In order to receive the credit, please remember you must answer at least 3 of the polling questions that we present during the webinar, and you must be present for the entirety of the webinar. You must also fill out our survey that we will send following the webinar with your information and your desire to attain the CPE credit. We will be recording this session, and we will also send that out following the webinar. So, now that that stuff is out of the way, I will go ahead and pass it over to Matt Walsh, who will kick off the presentation. Matt?
All right. Thank you, Brian. And am I sharing my screen? I'm not sure. All right, there we go. Okay, now you should see my screen. Good afternoon, everyone, and thank you for joining us this afternoon. As Brian said, my name is Matthew Walsh. I'm principal for indirect tax here with Sovos Compliance. I've been with Sovos now over 17 years, focusing on indirect tax, generally from the legal and research side. And happy today to be joined by Alex Laskowski. Alex is a partner with Grant Thornton in the Grant Thornton Chicago office. Alex has more than 26 years of experience working with the sales and use tax industry, and prior to joining Grant in 1993, he was a sales and use tax auditor with the state of Missouri. But we won't hold that against you, Alex, being an auditor.
Show me more.
All right, and today's topic, as we said, was from raw materials to the final sale, tax compliance along the supply chain. And so we went through the introductions already, and our agenda for that. We'll start with the manufacturing side, and then we'll roll over into the retail side. As we go along, we'll highlight some information we received from a survey that we had done earlier this year that spread between both manufacturers and retailers, and which actually spurred this discussion. Some of those issues will span both industries, but may show up on the manufacturing side or the retail side. But something that we thought would be interesting for the folks on this webinar, and provide you some information on some ways to maybe manage some of those challenges. Again, introductions we've run through. So actually now we'll go to our first polling question, and the first polling question is, will you be applying for CP credit while attending this webinar? So if you are, please say yes, and if not, no. Okay, and let's jump into it. So as I said, we had a study done by Aberdeen to talk about some of the indirect tax challenges, and we had it split between manufacturers and retailers, and some of the interesting comment or answers that we received, and actually some things that across the board are challenges is first, and as you can see on the top bullet there, is the increased audit frequency and the cost of support, and that was pretty evenly an issue across all respondents, and manufacturers and retailers in particular. The next one down, the business evolution, was again another area where across the industry that we saw some issues and shared concerns. The one on the bottom I think was interesting, that difficulty keeping up with the speed and volume of tax rate changes and rule changes. Obviously that tends to impact retailers more, as we saw in the study. And that sort of makes sense, right? Retailers are more focused on the final sale, and trying to keep up with those rate and rule changes can be quite an impact when they're doing that. Some of the biggest drains on businesses, again, across the board. Number one issue was responding to auditors' requests and notices and just managing that audit process. Another one, the third one down, was managing customer exemption certificates, something that, again, impacted across the industries. And then finally, researching the rules and product taxability, again, across the board, something that caused issues with both manufacturers and retailers. Alex, any surprises in those comments or in those responses from things that you've seen?
No, like the tax challenges. Many companies, the larger companies, the manufacturers are going through. A lot of them are going through SAP upgrades, whether it's HANA or say Oracle, maybe Oracle Fusion. We're seeing Copa and Ariba on the purchase side of things as procurement software. So we're seeing more and more companies, through technology, upgrading or even changing or adding to procurement software or their ERP system, even Workday. So that's what we're seeing a lot of. Besides the other challenges every day is more and more companies, especially the larger companies, are upgrading their software, their ERP systems, and the procurement systems. Yep. And the biggest drains, the biggest drains, at least what we see is manual processes. So anything you do manually, sometimes month after month after month, to me, is draining people, and we're seeing some of our clients try to get their VP of taxes or their CFOs to implement some new technology to get rid of manual processes.
Yep. And that's an interesting point, because our next slide actually shows the confidence of their current compliance systems across levels of respondents. And so, as you can see, the folks that are down in sort of the weeds and doing the work are not nearly as confident in their compliance as those folks at the higher level. So sort of a disconnect, Alex, you think, from the folks doing day-to-day work to those who are maybe at the executive level and don't actually see what the issues are on the ground?
Hey, when if you're the pilot, you fly the plane, you don't know what happens on the ground, all the maintenance and baggage and all that stuff, right, what it takes and all the problems that may happen. I was at lunch today with a tax director who was told by the VP, hey, for U.S. taxes, don't involve me. I'm assuming everything's perfect, right? And then he's saying that all the problems that they have, and then if I talk to one of his manager and his staff, they got more problems. So the more you drill down, the confidence level in this case, people know that there's maybe skeletons or processes that are broken, but the top people, hey, if I haven't heard of a big audit assessment or I haven't heard of a customer leaving us, there's no problems. I don't think there's problems here. So it's kind of funny how the reality of this, right?
Exactly. Yep. There's no problems until there's a problem.
Yeah.
As you said, but you're seeing some changes now, and people trying to automate more, which is at least a positive change. But
yeah.
Let's actually now jump into our second polling question of the day. So what type of business are you? A, manufacturer, B, a retailer, C, manufacturer with retail operations, or D, other. We'll give you a second to.
Hey man, while they answer the questions, we start talking about this. Nor did we mention that many companies are doing a lean process where hey, we're not going to increase headcount, we're not going to increase staff. By the way, we want our tax departments to be more productive. We want you guys to do this, this, and this. And if you don't correct those manual processes, it's hard to get away from it and focusing on bringing value. So that's where the indirect tax folks, if you see that chart about the confidence, the lower the confidence level means that they're doing a lot of work, a lot of manual processes, fixing a lot of broken pieces. Where if up top, if I don't hear that my window's not broken, if my window's not broken, I don't have to fix it. So I think a lot of times, many people on this call, they're fixing a lot of the problems, so the higher ups don't hear about them. So it's little editorial while people answer those questions.
Thanks. And hopefully fixing the problems and not sort of hiding them or putting them somewhere else where nobody can see them. All right. So let's jump into the manufacturing challenges. And so again, that Aberdeen study, we broke it down between retailers and manufacturers, and then asked some specific questions from manufacturers. So some of the issues, the biggest challenges they saw, maintaining complex tax rules. Again, limited resources.
Hey, that's mine. That's mine, Matt. That's mine right there.
That's right.
What I'm talking about.
Too much manual effort in the process.
That's another thing I'm talking about.
That's right. Alex, I knew you were a genius. That's why we have you on.
I mean, look at this. Limited tax resources, manual processes. Then the last one, difficulty aggregating tax information from multiple systems. I mean, with consolidation and stuff, I mean, the launch I was had, they have 5 different ERP systems and 2 procurement systems, and somebody says, hey, let's go on one platform, and then the problem you have with one platform, there's a rope. It's hard to get all 5 people pulling at the rope to make sure that their platform is the one that we go to. So just the biggest challenges of manufacturers, especially when they're on different platforms trying to decide. And then when I had one company in Pittsburgh, they decided to go with one platform. A year and a half later, they're switching to SAP. So just because they decide to go to one single platform doesn't mean they're going to stick with it.
Stick with it, right? Exactly. All right, so let's just jump into some of the issues, right? And obviously, on the manufacturing side, the use tax issues are the bigger concern. And again, remember, in the U.S., the burden of the use tax is on the business or on the taxpayer, right? This becomes a direct drain or cost on the business, and companies are responsible for tracking, accruing, and reporting, and making sure that they pay the appropriate use tax on all their purchases. You have to be able to, obviously trace and reconcile those asset purchases back to the GL and provide evidence of payments to an auditor. Tax compliance is only complete when you can prove that you did the right thing. So, if you did take an exemption or didn't pay tax on a particular purchase, you need to be able to prove that to the auditor and do it in a manner that is not overburdensome to yourself and gives that auditor obviously the information that they need or that they require to make sure that you get that exemption approved on audit.
All right. Matt, on that, the last 2 on the last slide is proof. You used the word proof twice, and I think going back to my Missouri days as a state auditor, before it was the art, right? I was the law. I made the decision as the auditor. It was, my supervisors didn't have the records. There was no data being sent to a processing center, and somebody's come up with a sample size. I basically was the auditor. So in that case, years ago, it was the art, former art. Now it looks like it's a science where proof, prove this, prove what you did. Piece of paper, electronic file. So more and more, as you're indicating here, the use tax issues is basically, showing that if you paid something, prove it to us, and then prove where you paid it, and then prove that you didn't get a refund on it. So a lot of proofing is going on, and looks like the states want to see evidence of, if tax was paid or tax wasn't paid.
Exactly. And the fact now is that they can take more data, right? So I'm assuming back in the days when you were the sheriff in town, right? The amount of data you could actually consume and look at in an audit was probably minuscule compared to what they're looking for and can access now, right?
I mean, I still got a couple stitches from all my paper cuts from pulling those invoice files. So
going through 2 boxes.
Hey, on your next slide, Matt, about the map of the U.S.
Yep.
Unfortunately, maybe we'll get there someday, but not every state's exemption manufacturers. Not every state manufacturing exemption is the same. So this slide kind of breaks it out into some of the states don't really have an manufacturing exemption. Minnesota changed from a where you pay the sales tax and you got a refund to now they have an exemption, right? So now you got to change your system and making sure you don't pay the tax up front. But real quickly, direct use exemption. There are states that that those machinery, those parts must be directly used in the process. So there's some type of limitation of the exemption. The exemption is not as broad. Whereas the integrated manufacturing exemption is the broader things where you could take stuff that's not related to or is not on the manufacturing facility, such as electrical parts or chiller or something that's integrated into the manufacturing. It's an important part of the manufacturing, but it doesn't directly use or it doesn't directly touch the product. So, Illinois being one of the states I'm at, they got an integrated plant theory where the exemption is more broader. Then you have your expanded plant theory where, hey, it has to be used in the manufacturing operation and must be able to either a new equipment, a new line, or a motor that could produce more, has higher capacity. So you got to show evidence, proof. Go back to your proof. You got to show evidence of that this machine that's replacing another machine is able to produce a higher volume. And then the state may push back saying, well, show us that it actually does, and the answer is, well, we don't have to show you, but it's capable of doing it. So, more and more, and the good part about this year is Arkansas changed their exemption to be, they were a very limited expanded plant theory state where basically you had to get a new machine, replacing any motor that's of an existing machine would not qualify. So now, Arkansas being a state where they expanded their exemption to offer more purchases being exempt under their expanded plant theory. So just a little observation. Now, how do you take, your manufacturer, you're in 10 states or 5 states, how do you take those different exemptions and have a system that actually will pay the correct amount of tax? Make sure you don't overpay or underpay the tax on purchases. So just a little synopsis. And Matt, why don't you cover the next slide?
Yeah, that's right. So actually, that leads right into this slide, Alex. And how do you manage that and make sure you're doing it properly, right? So, on the AP side, obviously for manufacturers, as you pointed out, it's always a challenge. The rules as to what items are eligible to be purchased pursuant to those special rules can vary substantially by jurisdictions. As you can say, they change too. Manufacturing doesn't seem to change as much maybe as the retail side, but there are changes. They happen every year. And trying to keep up with those changes. So you're right. Is it a raw material? Is it machinery and equipment? The replacement parts, are they covered under machinery equipment or not? Where within that manufacturing process are these materials going to be used? Because state by state that could differ, right? Obviously, R&D processes may be covered, but pollution control may not be, and depending on the piece of equipment.
And man, sorry, man. TWE covers all this, right? Like lubricants. I mean, there's some states like lubricants be taxable, some states lubricants exempt. I mean, you guys have a lot of researches on your side that makes sure that your state matrices in all the states regarding manufacturers are updated. Is that correct?
Exactly. Yep. So, near and dear to my heart, I ran that team for quite a long time. So made sure that all of these various distinctions are captured. And that our clients are able to automate those rules within their systems. And then as these rules change, we obviously update our systems to make sure that our clients stay compliant and up to date with the rules, and do that before they change, so that it's not something where you're trying to do catch up with and do refunds on. We can make sure that you stay compliant throughout the process. All right. So let's talk about, as you said, Alex, one of the issues that you see is a lot of the process right now is manual, and we saw in our poll that manual processes is one of the problems, particularly from the manufacturing point, trying to stay compliant. What are some of the ways that you could take those manual decisions out of that process?
Well, for instance, we get asked, being an accounting firm and providing a lot of tax consulting, we get asked, hey, can we get a matrix? And I always ask, well, what are you going to do with the matrix? And the answer I always get is, well, we're going to get the right answer. Maybe we'll have a system in place. And I said, well, you got TWE. They gave you the answers. Or you have an existing matrix. Yeah, but it's not working. They're not using it correctly. We got to go train the people. So can we get a matrix to train the people? And And then I started thinking, the team and us started thinking, well, why don't we just tell the people what we want them to do? And going back to the Siri days of Apple, or what's the Amazon one called, Echo, or then there's the Google one.
Alexa.
We're being used to, what's that?
Is that Alexa? I'm not sure what that is.
Yeah, Alexa. Alexa doesn't basically train us. Alexa tells us what the answer is, right? So let's start bringing Alexa into our tax world. And this is an example of what we did is taking this is a manual system, so this is not real time, telling the purchasers, hey, just code this in. What are you buying? How are you using it? What is it being used in? What state? And tell them how to mark the purchase order. And this is just basically taking a client's existing, in this case, taking a client's existing matrix, or what they have on their intranet site for the purchasing people to actually click, and then click this, and then pull up the matrix. Come on. In this day and age, people are not going to do that. So how do they do it? This takes 3 seconds for them to answer because it's all dropped down. And that goes into real time, there's 2 ways to what we see besides a very manual process. There's 2 ways to automate your process on the purchase side of it. One is real time, which is basically integration from the PO all the way to the tax payment. So once if you got SAP or Oracle, say I'm going to throw SAP in here, where Material Master Group and subgroups. Once they code that in, it's going to tell the purchaser in the purchasing system what the tax base is, what the tax rate is it 0 rate or is it taxable, and that will flow to the system. So if the vendor doesn't charge tax, it's going to automatically accrue tax on the payable side. If the vendor charges tax and it says no tax, then it should be short paid. So it's all automated. And that's really when the procurement or ERP systems come into place, and people want real time. And those are, you can read the advantages of those. It's great, short pay invoices, and make sure the tax rates match. But then what we notice for our clients is that real time, the disadvantages of sometimes there's a lot of maintenance on the tax department. I would hate to be a tax department where I'm spending more and more time, fixing a purchase order before, hey, we can't issue this purchase order until this is fixed, or we can't pay this vendor until you fix this. So it's very important if you don't automate it on real time, if you don't really automate 100% of it correctly, you spend a lot of time. And here's some examples of what it looks like on the purchase order side. If you don't automate it correctly and test every event through, we at Grant Thornton, we have a computerized testing where we do a comprehensive testing that will prevent a lot of this maintenance. But many of our clients, the tax department does a lot of maintenance with the purchasing people and the accounts payable people when it's real time, and that's getting more and more companies thinking maybe the batch solution is the way to go. And the batch solution is the batch solution may be the way to go because it's technology is changing so fast. Oracle Fusion, SAP HANA, Cloud, Coupa, Ariba. There's always updates to these. There's somebody new, whether it's Workday or NetSuite. And once you put in a real-time ERP or real-time solution, tax engine solution, real-time, basically, if you upgrade or change to another software platform, you have to redo it. And so what a batch automation does, and I believe you guys are coming out with a product in probably the next 4 months that would be a great solution for companies in that, on batch, it's really after the transaction occurs, the tax department will have full control over, what to accrue tax on based on, cost center, based on material group, based on vendor name. So the tax is calculated, use tax is actually calculated after the invoice is paid, but in most batch systems, you could basically not accrue the tax until it's approved by the tax department. So it gives the tax department a lot of control over the amount of use tax being paid, where it's not really automatic. These are approval process, and because it's there's advantages there. It's cost effective. It could go from one ERP to another. It's very user friendly. The one thing it doesn't do is basically reconciles or upfront matches what the vendor bills you to what you calculate. It doesn't do that as real time. So the biggest difference in real time, there's a matching of the purchase order to the tax on the purchase order versus the tax on the invoice. On a batch, there's no match. But Matt, if you go back to, well, you don't have to go back to the slide, but go back to what we wanted the batch where there's a diagram what the purchasers would do. They would code it. We'd tell them how to mark that exempt or taxable.
Mm-hmm.
So when you guys come up with your new product, if you basically take your answers, your configuration, and here's how we're going to decide what to pay use tax on, and then you use that to tell the purchasers, hey, we need you to code these three things in: material group, cost center, state, and we're going to tell you what the answer, how to mark the PO. You basically almost got your real-time stuff. So if they correctly mark the PO, then they're going to correctly, hopefully the vendor will, not charge tax or charge tax, and then after the accounts payable person gets it, it's going to be pretty close to correct. And if they didn't charge tax where the PO is marked taxable, that's probably because they don't have Nexus, and then the system will self-assess tax. So there's a way to do a batch system to compare to be the same as a real-time in effect, by having the purchasing people know how to code the invoice or how to code the PO. Right. So, any comments you got on that?
No, I think you're right, and so we're rolling out this product, as you said, right, over the next few months. And as what we saw too is, you're right, most times folks don't need that real-time integration, but they do need some sort of check and balance managed by the tax department. So being able to put that into a system, have that report come out so they can look at it. They generally, POs aren't processed real time, right? They're processed in an environment maybe once a week, once a month, so that there is time to stop those invoices going out if they don't want them to go out. And the other case that we saw was, a lot of companies have multiple systems, as we talked about already, and some of those systems you may not even be able to connect real time to an automated system, because of age or whatever. So this allows you to sort of combine all of your purchases, no matter what system they run it through the system, and get a full picture of your purchase side, and get a better handle on it. Sure.
And every company's different, Matt, right? So real time might be the solution, especially if it's financially driven or procurement driven or IT driven, right? But if you want to try to, ask all the tax people when they try to, bring a tax solution for the company, and they want to go real time, that may not be feasible because you need a lot of stakeholders. So a batch system may be, if it's tax driven, the batch may be the best answer. If it's IT driven or procurement driven or financially driven, the real time may be the solution. So this is good to have at least the tax people, and again, we could keep it the old-fashioned way, right, by hand and by our minds, right? And this is just robotics way. What makes sense? What are the options of tax department to basically be in more compliance by getting away from the tedious work and rely on people, because everybody's consolidating nowadays.
Yeah, exactly. Yep. And we could spend all day on that conversation, I think, but let's let's try to move ahead. Polling question number 3. So after we had that, what type of AP process automation do you have? A fully automated purchase process, validation and review, partial automation with some tools. Thank goodness for Excel. We have no AP review process, or I don't know.
Well, at Grant Thornton, I would say, at Grant Thornton we have, thank goodness for Excel. We used to have no AP review process, but now we do. And I think we're going towards partial automation with some tools. we're waiting. I guess, man. In this case, I could say we went up this ladder. I don't know. So we have no review process. All right, we got to put one in. Okay, Excel spreadsheet.
Yeah.
And now we're saying, well, now this has some partial automation. So maybe someday we'll have full automated on our purchasing about actually getting a new ERP system ourselves, and we may go to the full automated process.
All right, we can help it out. So let's jump into another issue for manufacturers, and this is the dreaded drop shipment scenario. So obviously the drop shipment scenario, you have a retailer, a consumer in a different state from that retailer, and then the manufacturer who's going to ship that directly to the consumer, and the manufacturer and customers share sort of the same state, and the retailer is actually out of state with no connection to the customer's location. And obviously the issue here becomes does that out-of-state resale certificate from the retailer to that manufacturer cover the transaction, or does the manufacturer, the drop shipper, become responsible for collecting tax on that interstate or intrastate sale when they ship directly to the consumer and they share Nexus? So there are a variety of states that do not allow out-of-state resale certificates or registrations. Right? California, Connecticut, DC. There's a bunch here. I won't go through the list. We have a map that actually highlights this a bit better. And Alex, I don't know if you want to chat to the map, but again, something that we see from our customers is how can I manage my drop shipment scenarios, and how do I know which states accept which certificates?
Yeah, I think on that one, well, those are the states in blue that you need a home state resale certificate from your I call it your middleman, right? The retailer. So you're the manufacturer, you're selling to a retailer who would ship it to a customer in California. Well, if that retailer is not registered in California and the manufacturer is, guess what? The manufacturer now has to collect tax, or is obligated to collect tax.
Exactly.
I think in the old days, man, everybody just looked away, right? Hide and seek.
Mm-hmm.
And if you go back to your first couple of pages, I think the ECM process was manufacturers were higher than retailers. I have several large retail clients, and they have issues with ECM at their stores and stuff. But it's funny how I don't know if people saw that. I think the manufacturers on ECM, 45 to 47% said, yeah, it's an issue now, versus 38% for retailers. So more and more manufacturers are getting exposed to having to collect exemption certificates based on drop shipment rules.
Yep. Yeah, exactly. And even some of those states, California, right? Isn't it a 10% increase in the price?
Yeah.
Right. In the wholesale price, just to sort of cover the what they would say would be the retail increase. So, so again, another tricky area, and something that for certificate management becomes a challenge for manufacturers. And let's roll into that, some exemption certificate management issues. And again, this goes across the board. So we have it in the manufacturing side, but it was also an issue for the retailers, as you pointed out, Alex. And what is that process, right? You have to get that certificate. You have to request it. You need to review it. You need to store it for audit support. And you also need to make sure that you're regularly reviewing and updating these certificates to make sure that they're still valid, right? So there are examples of certificates that expire, right? Florida's resale certificate, you have to renew every year. Other states and certain certificates may have a 2-year exemption period. Others may be good for, eternity. But there's also issues around, is it filled out properly, and does that certificate need to be updated? On the retail side, as you pointed out.
Yeah.
Yep, go ahead.
Yeah. No, I would say I think the state auditors have it pretty easy now. Everything's, you said request, review, store, review. I mean, when I used to review certificates, it was all paper. And then I was unorganized too, so I didn't, it used to be by alphabet, right? Exemption certificates. There's a couple of times I'm like, after the audit, I'm like, I forgot to give the certificate back to the client, to the taxpayer. I call them taxpayer back then. But now it's all, everything's, could be digital or electronic or on CD. But, there's still, several companies out there, a lot of companies that are still do the paper stuff, which is, you tend to, this brings challenges. And your next slide kind of describes it.
Right, right. So, Jim, sort of some of the challenges, common challenges with certificates, as you pointed out, right? Is it the right form for the exemption being claimed? Right, certain states have very specific certificates based on what it is that they're, is it a resale certificate versus a manufacturer certificate? So, some may just have a blanket cert. Again, collecting those certificates from customers can be difficult and time-consuming, particularly after the first one comes in, right? So if it's the first order, it might be easier to get that certificate initially, but then if you need to update it, or if that certificate is not correct, trying to get those back or try to get those updated and corrected or filled out properly. One of the things that we've seen is that people store certificates across multiple locations, particularly on the retail side. Now, I don't know if you've seen this, where someone walks into a store, that store is allowed to take in an exemption certificate, but then that exemption is good for the entire retail establishment. And then they go shop somewhere else. That certificate might be not ever sent back up to the home office and sits in a file somewhere in a store location, and trying to capture that at time of audit becomes a challenge.
It may be in somebody's text file, right?
Exactly. Yep.
Store takes a picture of it, right? Texts it to the person. Person never opens the text.
Exactly. Exactly.
Before we move on, I was asked today by a retailer who's got burned several times in different states, getting bad certificates because they're, the store clerk accepts them. They kind of want, hey, Alex, they asked me this, and I said, sure, I'm sure there is. Let me check, but I haven't got back to them. They call me 11 o'clock Central Time, but they asked, is there anything out there that shows that the numeric, or the digits for each state? Like Illinois has the 4-digit dash 4 digits. Some states take the photo ID number, 2 digits dash.
Yep.
Is there something that their people would know, like what's a valid number based on, the characters of that number? That's a good question.
Yeah, that is a question. And again, it varies from state, right? As you know, sometimes you could, by looking at the format of the number, you'll be able to say, yep, that's a valid number, or that's a valid format, maybe that's the number. Others you may not know. It could be a combination of federal ID numbers, or their social security numbers, or some other numbers. So the answer is it all depends, as you know. Which makes it
I know you're a lawyer, so that's you got that. It depends verbiage in your language, huh?
Exactly. It took me 3 years, Alex, but I finally got down when I graduated. It all depends. That's right.
Yeah, that's right.
All right. And then talking about certificates, one sort of bright spot is with the streamlined sales tax states, and so and for those who may not be following this, streamlined sales tax states have come together to harmonize their laws, try to make it simpler for taxpayers to collect sales tax and remit. And on the exemption certificate side, what they've done is come up with a sort of a uniform certificate. And in these states, you actually don't need to have the paper certificate as long as you have the electronic information that's required in that certificate in your records. So a benefit here, you don't need the paper. You do need the information. And so you need to make sure you're capturing that information. But it does remove the burden of having to keep those certificates and those paper copies somewhere. So there is a benefit here on the exemption certificate management side on the streamlined states, that you don't need to have those paper certs. So let's jump into question number 4. How do you manage your exemption certificates? You have a fully automated outsourced service, homegrown automation tools across the org, a manual process, or don't know?
Yeah, I think this one for us is definitely manual, but we don't have too many exemption certificates that we receive from our clients who are professional service firms. So, how about you, man?
Fully automated.
We're
fully automated. We're fully automated.
You're fully automated. Okay.
We're fully automated with our own tools. But for our clients, I see this, across the board. Most of it really is, they have some sort of manual process. Maybe a system that they've created with some spreadsheets that they are able to validate or to look up information. But it seems like for our clients, as they come into us looking to solve this problem, it's not automated tools. We have this manual process, and we need to automate it now. So.
Oh yeah, we're getting. I mean, every company is requesting this. You guys have what? You guys perform manage exemption certificate services where they outsource it to you, and then you guys do have your own ECM, right? Outside of your tax engine.
Yeah, exactly. We have an exemption certificate management tool that sits outside the tax engine. The tax engine obviously manages the tax rules around those certificates. Is it exempt or is it not? The management can be a fully outsourced service through our services team, or you can actually just utilize the software on your end if you want to do in-house management, but use our tools to help you to automate that. So we have. Yeah,
we're seeing more and more of our clients buying a third-party tool like yours to manage it versus in the old days they would just create their own database through like business objects or something like that. We're seeing more and more companies lean towards a certificate, third-party certificate database because they have all the certificates. Everything's electronic, it's stored. It has some validation, has more of a meat than a self-grown 2000 or 1998 before Y2K system. So we're seeing a lot of things here because it just takes a lot of time. And who's involved? Who's in charge of it? Is the credit in charge of it? Accounts receivable? Is it finance? Is it tax? I mean, who has billing? I mean, who's basically in charge of collecting these certificates? And then you're saying that a lot of companies have they collect paper. Does they actually get to the right people? So in order to have multiple users in multiple locations, a lot of people are going to third-party solutions.
Yep, and then it gives easy access. You can actually set up the system so that the auditor only gets to see certain certificates. You can run a report for them, generate that report, send it to them, not have to have somebody plowing through files or other desk drawers trying to find those certificates. That they're available and you can send them in an automated fashion electronically. Helps ease that audit issue and that audit pain too. So let's switch gears and move towards the retail side again. So exempt certificates, obviously something that straddles both retail as well as manufacturing. But let's look at some of the issues on the retail side. And again, audit penalties. Audit's number one biggest risk of their current process across the board. And then obviously reputation damage or lost competitive advantage is something that also is a risk on the retail side that they see. Biggest drains in the business, I'm not surprised. The auditing up there is number one again. Tax return prep is another issue that we see, particularly with retailers when they have multiple locations in the state and you have to report those out separately. It can be a big drain on time. The bottom when they're researching product taxability rules, as you can see, for the larger organizations, that tends to be a bigger issue, which makes sense, right? You have a bigger footprint, generally maybe a broader product base, so that keeping up with those changes is a challenge on the retail side. Right. And then top challenges again: increased audit frequency, evolution of business, increased penalties from audit or filing. So again, we can see audit is a continuing theme here, Alex, in managing those current forward. And then there's top challenges: difficulty aggregating tax information from multiple locations and maintaining rules for complex queues. Right up there, tied. And then distinguishing Nexus status for online sales. As we see a common theme, and again, if you probably see this in your work every day, Alex, is audits become an issue. There's a problem. Audits are becoming more frequent. But then with all these disparate systems, getting that information pulled together becomes a big challenge, particularly on the retail side.
Yeah, man, I got a retail client that the audit period is 2008 to 2011. We're still at the audit level. We haven't gone to the audit level. Of course, they got waivers signed and. You think through technology that audits would take less time, But going back to the proofing process and companies being lean and stuff like that, audits are still taking a lot of time.
Yeah.
And I always say that each state should have a portal or a SharePoint. You throw it out. The auditor asks for it. They want it in 2 weeks. You rush to get to it. You're 2 days late, and then all of a sudden the auditor takes 2 months to get back to you.
Right. Yeah.
It's frustrating.
And it's down the back burner. Then they take another 2 months when you answer that question. So it's a long process. And if you're reaching back to 2008, hopefully those rules
maybe you have the auditors
still around.
Yeah, you have the auditors who are told be at taxpayers. So if you treat them right, they'll be at your facility. They won't finish your audit, but they'll be working on other audits while they're at your facility, and then you're wondering why it's taking so long. Well, the auditors, likes the free coffee, likes the cafeteria, and so I don't know if there'll be a quick fix about quick audits. Matt, maybe you guys come up with a I think the old days of the Streamline came out with this the certified sales tax firms, and maybe do a self audit, but we're not there yet.
Well, we are a certified service provider for Streamline, and we do get audited every 3 years. It's not as painful as back to 2008, but there's still some back and forth, right? There's data being exchanged, but there's always questions, and so it's a better process, probably not a perfect process. But if you have things like and this is for another day, outside of the U.S., Mexico, for instance, is doing full-on e-auditing. So, a business uploads their transactional data. They then file their returns at the end of the month, and automatically Mexico has a process in place to audit the transactional data to the returns, and if there's discrepancies, you are assessed a penalty automatically. So that might be more efficient than some folks want, but it's the way I think everybody's heading, and you're right. You got to get this to be more efficient and help businesses, but governments are also looking for ways to be more efficient too. And so watch outside the U.S. to see some of these things that are changing and changing how audits are being done is pretty interesting. Mm-hmm. On the retail side, as you can see, for retailers, obviously there's a variety of transaction or systems that are in place to help manage these sales, and you got to make sure that all those transactions apply the correct taxes at the time, and these need to be real time, right? This needs to be at the time that purchaser comes into the register or is on your website, that transaction flows through and you get the correct results, correct tax information and results to give that person, so that you're not caught short or that you're not overcharging. But then you need to combine all that data into one system to then report out to all the jurisdictions that you need to report to. So massive amounts of data coming in from multiple systems while you're still trying to manage certificates for your exempt purchasers, and then try to gather all that data, combine it so that you can report on it appropriately at the end of the month. Something that we see, across the board for retailers. And back in the day, and actually, retailers, they had a POS system, they had, storefronts, and then e-com started to creep in. But now you have mobile devices, you have call-in, order online, pick up at the store, order at the store, have delivered to the house. There's a variety of systems now that retailers have to use to satisfy the current market, and all that information has to then be combined and brought together into one location. Some of the options that you can use for tax determination when you're managing with multiple solution or multiple channels, you can have a real-time cloud connection, right? So your system's connected to a determination engine like ours, based in the cloud. What are some of the pros to that? Is obviously get full functionality, all the details, all the rates and rules completely up to date and current as of that moment. One of the issues that we see, and one of the concerns that a lot of retailers have, is what if we lose that connection? What can we do while we're trying to process sales? If, let's say, the backhoe, they're doing construction in the parking lot and somebody cuts your line and you can't actually connect to the internet anymore. So something to think about, but also, a lot of pros and benefits there. You can do a local deployment where you can have, the tax information and tax engine right there in the store or in some local server. It's local, it's quick. Generally, you don't have connection issues, particularly if they're within the same building. But then you have some challenges in terms of managing those rule updates and those content updates, and also having hardware requirements locally. So that adds to the IT costs and makes makes that deployment maybe a bit more expensive than some others. We have what you can do a rate and rule download. So essentially, you have a cloud connection somewhere or a cloud service, but then you take pieces of that and push it down to the local stores or to the to the local registers. So you only need to load content that's needed in that location. There's really no hardware outside of the POS that's needed, and you generally don't have the loss of connection issues. But there are some cons there. Limited content is available. Managing rule updates also becomes a bit of a challenge. And what we see is that a lot of times is someone will implement a real-time cloud connection, but have a rate and rule download as a backup. So in case that backhoe does cut their line and they lose connectivity, they're not sort of dead in the water and not charging tax. They have something as a backup. So when that real-time connection goes down, they have something there. And then the other is, you can just load rates only. It's generally, a simple upload. To where the loss of connection. The issue there is obviously that you don't have product taxability rules. So if you have something that's within your product line that's not subject to general taxes or the general tax rate, you need to then account for that somehow within the system and manage that internally on your own. I don't know, Alex, as you've gone through, have you seen any other options for on the retail side in terms of trying to manage these multiple channels?
Yeah, the internet. Looking up the rates themselves. The manual. But, you covered it. You covered pretty well here, and there's always solutions out there. What's the right solution? Going back to consolidated reports and stuff, central database and consolidated uploads. Reporting is. I see more and more. We're talking to this one supplier. I think the future is more into. The near future is more into flashboards or dashboards and taking data, making it fancy, making it look good, right? The pie charts and everything. Yep. We can see that, right? How much tax did you pay to the vendor on this account? How much sales tax did we collect on these particular products? What's our exposure when it comes down to sales of this? More and more, going back to the old days, Matt, I've been doing this, I think you mentioned 26 years. My eyes are getting worse and worse when I look at spreadsheets. It's a lot easier to look at graphs in a dashboard, right?
Yep.
I see a picture, and I can draw conclusions, and then if I want to go to the detail, I'll go to detail, versus seeing numbers on a spreadsheet, right? And I'm reading numbers, and then I can go to the detail if I want to. Rather than reading numbers, you read a colorful pie chart or colorful dashboard with some numbers in it to give me a visualization and a comfort level that I know what's going on. So we'll see what's going on with that. Any comments on this sheet? Man, I know we got a couple more slides to go into. We got a couple more minutes, and I want to make sure we can answer all the questions in our slot or in our chat room.
Yep. Yeah. So it's we'll just go through this quick. Obviously, then once you have all those multiple channels, you got to consolidate all the transaction for reporting. And then what are the options? You can do full transactional uploads to a central database. So obviously the pros there, you get full transactional detail, but of course file size, upload times, depending on your systems, you may not be able to upload that much data. So something to think about. Then you could do the consolidated route. Less data to manage, but then you lose a lot of detail. You lose the ability to use those data for analytics, as you were talking about. Those fancy charts and graphs you want to see, Alex. You lose the ability to really get those if you consolidate your data, and you also may lose information you need for the auditor. right? And so the auditor comes in, and if you've consolidated your data and have lost exemption information, you have a problem. So something to think about. One of the other issues we saw on the retail side was obviously product taxability and issues around that. And this is something that's always changing in the retail space, changes to product tax rules. One of our favorites here obviously is sales tax holidays. And this just gives you an example of across the country which states had holidays and which states had multiple holidays over 2017. It used to be in the summer when I started 17 years ago, Alex, July, August, you could kind of sit back and relax and take things, take the months off actually. But those are some of our busiest times now, the July, August timeframe, trying to manage these sales tax holidays for our retail clients. They change every year, right? The categories can vary every year and do vary every year. And then even though they may be recurring, what actually falls in that holiday can change based on DOR rate rules and letter rulings and so on. So some of the categories we've seen, obviously clothing has been an ongoing holiday since the beginning. School supplies, disaster preparedness, as you know, we just had 2 hurricanes hit the U.S. Those states had disaster preparedness holidays. The Second Amendment holidays, generally for firearms and ammunition, and then the Energy Star holidays as well for products that have energy savings tied to them. And the thresholds vary, right, from $10 up to $6,000, and then the time frames vary too. So, you're trying to manage your general products, and then you need to manage these holidays in terms of getting those very short-term exemptions and thresholds into your system, and then manage those during that period of time, but then also make sure that they shut off at the appropriate time. So it's quite a challenge for retailers as we go. Sort of one of the questions for retailers is, what am I selling, right? So right now, as of the last count, we have 5,837 distinct goods and services codes in our calculation engine. Those are essentially distinct codes for product taxability, both their services and goods. And as you know, the definitions differ between states. So even though 2 states may exempt food, what is food may be different. What's a good versus a service versus a combination, and does, when you combine a good and a service together, does the service component become part of the good, and so on. All issues for retailers that they need to manage and deal with as these rules change. And then, of course, expanding tax base. States are moving to tax more services. And in addition, especially for digital products, looking to keep up with the changes in how products are delivered. And so you're seeing more and more states roll into taxing, digital photos, digital music that they may not have taxed 4 or 5 years ago, to try and keep up with the changes. But as you and I both know, we all know, states are slow to keep up with technology. And so as they finally roll out rules, oftentimes that technology has moved on, and businesses are delivering things in new ways. Let's talk real quick about Nexus, and that was another issue that we saw on the retailer side. So as anybody who's paying attention in the U.S., right, sales tax Nexus is generally established when you have a physical property. That's our old Quill case and has been sort of tried and true for many years. But the states are pushing up against that and trying to get that changed, essentially. So there's some other ways to establish Nexus, right? So there's click-through Nexus laws, in-state partners driving web traffic to an out-of-state vendor's website for a fee. Affiliate Nexus, when the out-of-state vendor is connected or related to an entity in state. And now what we're seeing, and across the past 18 months or so, are more and more states enacting economic Nexus laws, which are quite interesting, quite controversial, and are working their way through the court systems now. This gives you a quick map of states that have done affiliate Nexus versus click-through and economic. So where are we now with that economic Nexus? So South Dakota passed the law effective the beginning of this year, was actually not implemented because there was a lawsuit that was filed challenging it. This law is fast-tracked to get to the U.S. Supreme Court, and actually there was arguments just 2 weeks ago now in South Dakota, at the Supreme Court level in South Dakota on this case, and we're waiting to hear how that case comes down. Alabama also implemented an economic nexus law. That is also being challenged in the courts, but not working quite as fast as South Dakota. Wyoming was rolling out a law of their own. There was talk that would also be subject to a lawsuit, waiting for that. my state here in Massachusetts, we actually rolled out an e-com app and cookie rule that was a bit different in expanding how you could have Nexus in the state. That was actually delayed at the last moment due to some challenges, but that is actually being reworked, and we expect that will be rolled back out again, maybe for a genuine timeframe. So Nexus is an area that is an ongoing battle. I think we all understand that things have to change. The standards will probably change. How that shakes out in the end, we're all still trying to determine. There is some federal action. There's legislative action. There are some bills pending in both the House and the Senate. They don't seem to be going anywhere at this moment. There's a lot of conflicting priorities in Washington right now, and so this is not top of mind, from what we can see, but it is being discussed in Congress. If the U.S. Supreme Court agrees to take up a case, say that South Dakota case, we think that will spur action by the legislature to do something, but we'll see. And on the judicial side, again, no guarantee the Supreme Court will hear any of these cases, but the thought is that South Dakota case might be the one that makes it up there to see if the Quill doctrine still stands. Okay. We also had some states implement notification reporting requirements so that you may not have to collect tax, but you do need to inform your customers of their obligation to self-assess tax, and here's a few of the states that have done that. Colorado is probably the most aggressive, where if the vendor doesn't do that, there are fines and penalties associated with it, and Colorado is requiring those remote sellers to actually remit a report to the state of all the sales into their state and who bought those. Now that law is effective, right? They were challenged and the courts upheld the law, but it has not been rolled out yet in practice, so we're waiting to see how that gets rolled out. Okay. Again, federal legislation right now just sort of pending. We'll keep you up to date on that. So there are no changes at this point, but there are some bills pending in Congress. They've been pending for a couple of years, and we'll see if any of these state cases actually spur Congress to act on any of these pending bills. And
with time, there's here are some issues that retailers face. The one thing I just want to point out is coupons. They're funded by both the retailer and manufacturer. A lot of the retailers are starting to have store coupons that are not really funded strictly by the retailer, but are a combination of both. The tax treatment of that, is it treated as a manufacturer's third-party coupon? Is it treated as a retailer's coupon, or a combination of both? Just here are some of the items that retailers are basically confronted with on a day in and day out basis. Their systems have to be correct in the store. So, up to the next slide, Matt.
Yep. So that leads us to our last polling question. Yeah. So what are your biggest concerns for your indirect tax compliance efforts? Is it increased audit activities, increased data requirements from jurisdictions, managing all my data, keeping up with changing legislation and rules, or unknown exposure?
And while we're on that, we could probably just answer some questions. We did get a question from Bob A. Bob A., I don't know where you're at, Bob A., but I'm going to say Bob A. from Alabama. Can we get a copy of the slides?
And that's an easy one. I can certainly. The presentation was actually recorded, and the slide deck will be available as well. So some key takeaways, as you know, and again, if you have some questions, please type them into the box. Happy to answer them. If we can't get to them, I'm happy to follow up afterwards and send you a personal email responding. But so some takeaways from today, right? Challenges and risk present at every stage in the supply chain, and we can see that, with that Aberdeen study and day-to-day work that we're doing. We know that there's always challenges and risks, right? Automation is going to reduce that risk and allows resources to be focused on other areas such as audit support, and automating will help to reduce that audit burden by having things electronically available and more easily suppliable to the auditor. Exemption cert management is difficult with every level of supply chain, and sales and use tax laws continue to develop and evolve. And if you're not keeping up with it and have some sort of system in place, you just get further and further behind. Alex, anything to add?
No, I just want to, my comment is thank everybody for their participation, and hope you guys enjoyed the call. And Matt, thanks for inviting me. I always like doing this. And lastly, I don't see, my prediction, I don't see anything happening in the federal legislation front for a couple more years. And so I think the states would be more aggressive on economic nexus if they got a budget issue. So thanks for having me again, and I'll throw it back to you for the parting comments, I guess.
All right. No, appreciate your time, Alex. Really always enjoyed doing these sessions with you and having your knowledge. Thank you, everybody, for joining today. Again, if you have questions that we couldn't get to, please put them in, and we will respond. And again, this webinar was recorded, so you'll be able to replay it and then have a copy of the slides as well. Thank you for your time, and have a great day.